SoftBank is a major Japanese holding company, active in everything from mobile phones to technology investments. Founded in 1981 by Masayoshi Son, the company has grown from a small software distributor into a global powerhouse, with interests spanning telecommunications, internet services, and cutting-edge technology ventures. It's known for bold moves and shaping the future of tech, making its financial results closely watched by investors and analysts worldwide. SoftBank's decisions often set the tone for the broader tech industry, influencing trends and sparking conversations about innovation and risk-taking. These results are more than numbers. They reveal trends in telecommunications, technology, and innovation. Each quarterly report offers a glimpse into how SoftBank navigates a rapidly changing landscape, adapting to new opportunities and challenges. SoftBank's performance signals the health of the industries it touches, from Japan's mobile market to global AI and e-commerce. Its investments and partnerships often shape the direction of entire sectors, making its progress a key indicator for the future of tech. The company's history is filled with big bets, some wildly successful, others challenging, making each financial report a story of strategy and adaptation. Every milestone reflects lessons learned and new ambitions, as SoftBank continues to evolve. Today, February 9, 2026, marks a new chapter, a strategic shift that's already showing promising signs of stability and growth. This moment is more than just a date, it's a turning point for the company and its stakeholders. Think of this as checking in on a friend's ambitious project. You want to know if their hard work is paying off and what's next. There's a sense of anticipation and curiosity about the future. We'll break down SoftBank's latest results in simple terms, exploring what's working and why. Our goal is to make sense of the numbers and highlight the strategies behind them. This isn't just about money. It's about a company making smart changes for a stronger, more profitable future. SoftBank's journey is about resilience, vision, and the drive to stay ahead. Let's dive into how SoftBank is building a better tomorrow for itself and its stakeholders. The steps it takes today could shape the technology landscape for years to come. Here's what you need to know about SoftBank's journey and what its latest results reveal about its ongoing transformation and future ambitions. The headline from SoftBank's latest report: an 8% jump in consolidated operating profit year over year. For a company of SoftBank's size, that's a major achievement and a clear sign of positive momentum. This growth slightly beat analyst expectations, boosting investor confidence. It's the result of disciplined management and strategic decisions across SoftBank's businesses. The company also raised its profit forecast by 2%, signaling even greater confidence in the months ahead. When a company raises guidance, it tells the market these positive trends are expected to continue. For SoftBank, this reinforces that its new strategy is working. The main takeaway: strength and optimism. An 8% profit increase is a healthy sign of a company on the right track. Next, let's look at what this number really means and what's driving the growth. Let's clarify operating profit. It's a term you'll hear often in business, but what does it really mean for a company's success? It's simply the money left after subtracting day-to-day business costs from revenue. Think of it as the profit a business makes from its regular operations before any outside factors come into play. Imagine a coffee shop. Revenue comes from sales, but expenses like ingredients, wages, rent, and utilities must be paid first. Only after covering these essentials do you see the true operating profit. What's left is operating profit, a key measure of how well the core business is performing, regardless of outside influences. It excludes taxes, debt interest, and one-time events, giving a clear, focused view of business health and operational efficiency. Companies can boost operating profit by increasing sales, cutting costs, or both. Improving efficiency and making smart decisions are crucial. For SoftBank, the 8% growth means it's become more efficient and profitable at its core, not just growing in size but also in quality. This isn't just about getting bigger, it's about getting smarter and more resilient in a competitive market. The best companies grow revenue and control costs at the same time, striking a balance that leads to sustainable success. SoftBank's success comes from managing both sides of the equation, driving sales while keeping expenses in check. Understanding this helps us appreciate why its recent results matter and why operating profit is such a vital metric. Now let's see which parts of SoftBank's business made this growth possible and how smart management played a role. Efficiency and smart management are at the heart of the story, driving real, lasting progress. Where did SoftBank's 8% profit growth originate? The answer: nearly every business segment contributed, showing broad-based strength. The consumer segment, mainly mobile phones, and new ventures both delivered strong results. This widespread success makes profit growth more sustainable and less risky. Not every area excelled. Media and e-commerce lagged, but the strong segments more than compensated. Transparency about weaker areas builds investor trust. The key takeaway: SoftBank's diversified approach is working. Success across multiple divisions creates a powerful engine for profit. This balance is what every large, well-run company strives for. The consumer segment, led by mobile phones, was the star. Operating profit soared 16% year-over-year. This wasn't about chasing more customers at any cost, but about prioritizing profitability and quality. SoftBank shifted away from aggressive promotions and focused on retaining high-value, loyal customers. Net subscriber additions declined, but core subscription lines grew 2%, showing a stronger foundation. Average revenue per user stayed flat, so profit gains came from efficiency, not higher prices. The company cut costs by reducing churn and targeting profitable customers. This is a classic case of working smarter, not harder. The result: a more stable, efficient, and profitable mobile business. Strategic discipline in the consumer segment is driving overall company success. SoftBank's new approach is about building long-term value, not just short-term growth. The numbers prove this strategy is paying off. It's a model for sustainable, high-quality growth. Beyond mobile, SoftBank's investments in new growth areas are taking off. Revenue in these ventures jumped 23% year-over-year, with operating profit surging an incredible 87%. These aren't just experimental projects anymore. They're becoming major profit engines. Growth was fueled by more users and better margins, meaning SoftBank is keeping more of what it earns. Annualized EBITDA in these areas is nearing 150 billion yen, a major milestone. These businesses are maturing fast, adding real value to the company. The dual-engine approach, stable mobile profits and explosive new ventures, sets SoftBank apart. Success here proves SoftBank can spot and scale the next wave of innovation. These results show the company's future bets are already paying off. SoftBank is building a more dynamic, diversified business for the years ahead. What ties SoftBank's recent success together? It's a decisive shift from chasing rapid expansion to embracing profit-focused management, a move that's reshaping the company's future. For years, growth metrics like new subscribers and revenue spikes dominated the conversation. But now, sustainable profitability and long-term financial health have become the top priorities for leadership. The company is even willing to let go of less profitable customers and business lines, making tough decisions to strengthen its bottom line and ensure future stability. This new strategic discipline is evident across the board, from the core mobile business to SoftBank's ambitious new growth segments. Growth still matters. Just look at the impressive 23% revenue jump in new ventures. But now it's paired with a relentless focus on efficiency, cost control, and margin expansion. The question isn't just how can we grow, but how can we grow profitably and make every new step count for the bottom line. This dual focus on expansion and efficiency has already paid off, leading to an impressive 87% profit surge in new businesses, a clear sign of the strategy's success. The result? High-quality, sustainable growth that directly strengthens SoftBank's finances and positions the company for future opportunities. This strategic pivot marks a bold new era for the company, one defined by discipline and a clear vision for the future. It's about building resilience, ensuring predictability, and delivering long-term value for shareholders and stakeholders alike. SoftBank is proving it can control its destiny, adapt to changing times, and build a solid foundation for the future, one that's built to last. What does all this mean for SoftBank? In short, the company is stronger than ever. The mobile segment's steady profits provide a reliable foundation. Explosive growth in new ventures adds a second engine of high-speed expansion. This dual approach diversifies profit sources and boosts resilience. SoftBank's ability to spot and scale innovation remains sharp. The company's strategic shift to profitability is a clear success. For investors, this means more predictability and financial strength. For the market, it cements SoftBank's leadership in tech and telecom. The outlook: a smarter, more efficient, and future-ready company. In conclusion, SoftBank's latest results send a powerful message. The 8% profit jump is proof of a successful, profit-focused strategy. The company's disciplined approach is transforming its core businesses and new ventures alike. Mobile profits are up, new growth areas are booming, and the company is more resilient than ever. Raising future profit guidance shows confidence this success will continue. For investors and observers, the takeaway is optimism. SoftBank is thriving. The company has navigated a crucial shift and is reaping the rewards. The numbers are strong, the strategy is working, and the future looks bright. SoftBank is building a profitable, innovative path forward.